Okay, I think I'm live on Facebook. Hello. All right, looks like I'm live on Facebook. And I'm also live on Instagram. All right, how you doing today? Thank you for joining this month live Q&A. How are you? All right, I'm pretty sure that I'm live.
So, tell me, what did you sign?
Okay. Hi, Zizat. How you doing? Okay. Looks like I'm live on Instagram and also not sure if I'm live on Facebook. Let's see. Okay, yeah, someone just joined. So, hello, how you doing today? Hello, say hello as you join this live video. Let me know where you're tuning in from. This is Bernice Atan, CPA. I'm back this month again for another Q&A section. So if you have any questions as it relates to the PPP loan, IRS taxes, audits, feel free to comment and I'll be glad to answer your questions, okay? So how are you doing today? How's everything going? This month is actually the busiest month for us, the month of March. We have so much going on with the PPP and it's very impressive. We got so many PPP loan for lots of our clients. So I'll be taking questions. Hi Lyle, how are you, darling? Thanks for joining. So I'll be taking questions. If you have if you're having any difficulties getting the PPP loan, or you have any challenge that you would like to discuss on this live video, I'll be glad to, answer your question. Hi, Richard. Thanks for joining. So before we get started, I would like to make some announcements. As you know, the deadline to file your taxes has been extended for 2020 tax return. So you have until May 17th, 2021 to file your 2020 taxes. So if you know that you can't make the May 17th, it will make sense for you to file an extension, all right? So as you join in, if you have questions, just type the comments or you can call the office and I can talk to you live. The number to call is 443-741-4188, all right? So I would love to have this live video as interactive as possible. Okay, I hate talking to myself, so you can either comment or call the office. But we do this every month where I would come on live and kind of I put a lot of content out there regarding taxes, PPP loan forgiveness, negotiating IRS taxes, back taxes. So any questions that you would like to ask me, I would be glad to answer your questions, okay? Hopefully, I will just probably spend about 15 minutes because I have a lot of stuff to do today. We are very busy right now, so it's not going to take so long. But if you have questions, so I encourage you to please just drop the comments in the comment section or you can call the office, okay? So the very first announcement that I would like to talk about is the deadline. So the deadline for this year, you already know, it has been extended to May 17th. So you have until May 17th to file your personal taxes, and the S corporation was March 15th, okay? But your partnership, the partnership was also March 15th, right? Yes. Okay, so partnership tax return and S corporation taxes, those were not extended. So you had to file that by March 15th. But if you have a C corporation or personal taxes that you have not filed, you have until May 17th, okay? Also, the new PPP deadline is May 31st. So the Congress already approved it. They are extending it, giving you time to apply for the PPP loan. So if you have not yet applied for the PPP loan, I encourage you want to do this. It's free money. There's no reason why you should not be, applying for this loan. Because a lot of our clients that we get the loan for, we are now in the process of applying for the forgiveness. So the deadline has been extended through May 31st. And, I get a lot of questions from real estate agents, small businesses, they have 1099, and the question whether or not they should apply for the PPP. You should apply for the PPP if you are self-employed. If you receive, your income on a 1099, you have to apply for the PPP loan. Because right now, you don't even have to show any net profits. The PPP, the new guidelines now, they are now using the gross sales. So if you make $100,000, in your business, even though your bottom line is a net loss and you are not showing any profits, you can apply for the PPP. You will get a maximum amount. The maximum amount for the Schedule C is $20,833. They have a cap. So if you don't have any employees and you get paid via 1099, you can apply for the PPP loan using your gross sales, okay? They really don't care now about the profits. So whether or not you show net profits, they don't care about that. They are looking at your gross sales, and you can get up to $20,833. So if you did not get the first loan, you can apply and get the first loan. If you already got the first loan, then you can apply to get the second draw, okay? You just have to be able to show that your business was affected and you had a decrease in sales for about 25%, okay? So I encourage you to do this. A lot of people who has S corporations and they are not paying their employees on W-2. I've received so many questions from S corporation owners. What we do for our clients, because if you go to the bank and you have an S corp, one of the requirements for an S corp is to pay yourself on a W-2, okay? So we have so many people that they are not paying themselves and they want to take advantage of the PPP loan. So what you have to do is, for the sake of the PPP, you probably have to do a Schedule C to transfer your numbers on a Schedule C and use that. The only disadvantage is that there's a cap. The cap is $20,833. Unlike if you paid yourself or if you have employees, you can get qualified using your employees' wages and your wages. The total wages divided by 12 multiplied by 2.5 is the loan amount that you'll be qualified for. Okay, so very important. And for those of you who already received the PPP loan and it's been like 8 weeks, you might need to start looking into getting the forgiveness, going through the PPP loan forgiveness, okay? Because, you have till 8 weeks. You have 8 weeks to spend the funds. So your total amount of your PPP loan, when you get the loan, you divide that by 8 weeks, especially for, people that do not have any employees and really the loan is for them. You would take the total amount of the loan and divide by 8 weeks. And you can pay yourself on a weekly basis, on a bi-weekly basis. So once you're done, spending the funds and it's 8 weeks, you can apply for the PPP loan forgiveness, okay? Very important. You don't want to pay back a loan that you can get it forgiven, if you can get it forgiven, okay? So let me see if I have any questions so far. How about LLC or sole proprietorship? How about that, Lio? I don't think I understand your question. LLC or sole proprietorship. So if you're LLC or sole proprietorship, you would have used your Schedule C, right, to get the PPP loan. So if you use your Schedule C to get the PPP loan, they are no longer using the net profits. The new law right now allows you to use your gross, which is nice. So if your gross sales, if you make about $100,000 or more on your gross sales, you will get the entire $20,000. But if you make, let's say you make $50,000, then you will get half of that. So yeah, I'm not sure meaning what is the deadline to file taxes? Oh, the deadline to file taxes is May 17th. Yeah, May 17th is the deadline. They extended it. The usual deadline is April 15th. But because of everything that is going on, which is, I don't even know if that's a good thing for us, because it's just a lot to keep up with, the tax deadline and also the PPP loan. But you have until May 17th to get your taxes filed. All right, Layo, thanks for asking that question. So if you have any questions, feel free to comment and I'll be glad to. Was referring to the deadline. Yes, I got it. So the deadline to file your LLC, or if you're a sole proprietor, you file a Schedule C. When you file your taxes, you have to file the business tax and your taxes together. Okay, so you will have to file that by May 17th is the deadline. Okay, you are welcome. All right, so what else do I want to talk about? Okay, I want to also mention about the personal property tax deadline. Okay, so the deadline that was extended is for your personal taxes, the LLC, the sole proprietors, C corporation, but your personal property taxes that you have to pay for people who live in Maryland, that you have to file your personal property taxes every year to keep your LLC in good standing. A lot of people don't even know the requirements. They just register their LLC and they go about, doing their business. They don't even know what the requirement is. So you have to understand that you need to file a personal property tax return. If you reside in Maryland, the deadline, they did not extend that. The deadline to file that is still April 15th, okay? So to keep your LLC in good standing, you have to file the personal property tax return and pay $300 to the state of Maryland. If you live in another state, you have to check with the, what the deadline is. I'm not sure, but I know for Maryland, you have until April 15th to get that done. That is not extended, okay? Can you include your W-2 and your Schedule C as the gross income for the loan? Can you include your W-2 and your Schedule C as the gross income for the sale? So the answer to that, Joelle, I don't know who this is, but the answer to that is no. If you are using, so I'm assuming that you file a Schedule C because you're a sole proprietor, right? Or LLC. So if that's the case and you pay yourself a salary or you have employees on salary, you have to use the payroll wages, okay? For yourself and also for your employees. You can't use both, okay? So it's either they qualify you using the gross sales for your business, or you use your W-2 wages. You can't use both, okay? I hope I answered that question correctly. If I do, give me a thumbs up. But you cannot use both, okay? You can either use just the salaries or the gross sales, okay? And the max that you can get is $20,833. So you have to kind of do the math. That's what we do for our clients. The reason why a lot of people engage us is to make sure that they are getting the maximum loan amount possible. So, you want to make sure that you're doing the calculation correctly because, this is free money. You don't have to pay it back. So you want to compare what is the gross sales, what is the max that I can get. So for Schedule C, the max amount is $20,833 if you are using your Schedule C. They're not going to give you more than that. So if you pay employees or you paid yourself and your total annual salaries is higher than $100,000, then you want to use that instead. Because what they would do is they would take your total wages that you paid yourself and your employees. They would divide that by 12 to get the average monthly payroll wages, and you will get 2.5 of that in loan. So if you, let's say for instance, the total amount that you paid your staff and yourself is $200,000, they would divide that by 12 and multiply by 2.5. So that would give you more loan amounts than using your Schedule C. So you want to kind of do that comparison, okay? All right, good. I'm glad I answered your question. So it looks like I have another question here on Facebook. So this is coming from Nikki. Hi, Nikki. Thanks for joining today's live video. Let's see. For the annual good standing filing, does that have to be done by April 15? Yes, I mentioned that the last time. Yes. So your personal property taxes, LLC filing for the IRS, you have to get that file. That was extended for the personal taxes. That was extended through May 17th. But your personal property tax return that you need to file with the state of Maryland, you know, we do this every year. For us that we, you know, our practice is in Maryland, you have a business that is operational. For you to keep your LLC status in good standing, same for the S corporation as well, or any corporation that you own, you have to make sure you file your personal property tax return by April 15th, okay? That one is not extended, so you must get that file, okay, Nikki? I hope I answered that question. If I do, give me a thumbs up. So ask me questions. You know, I only have 5 more minutes because we are very, very busy. We have so many, you know, clients that we are helping for the PPP loan. The PPP loan, we actually received lots of approval this week. Nyla, how many approvals did we get this week? A whole lot, right? Compared to the previous week. Things are moving along. We are getting so many approval. People are getting their loan. They are getting funded. So if you need help, feel free to reach out. We'll be glad to help you. And what else? What other questions do I have here? Random question. If you sell... Okay. Oh, God. It will not let me... If you sell an investment property but use the proceeds to buy another property, do you still... I cannot read the rest of the question. I don't know why. Seymour, okay, now I can. So, random question. If you sell an investment property, but you use the proceeds to buy another investment property, do you still have to pay taxes on the income from the original sale? That's a good question. So, well, it depends on how you execute the sale, okay? There's something they call Section 1231 exchange. 1231 exchange is if you purchase a property, right? If you own the property and you sell that property and you use the proceeds from that property to buy another property, I believe it has to be within 180 days. Not sure. I have to check on that. But if you sell the property within if you use the proceeds from the sale to buy another like kind property within 180 days, you are excluded from paying capital gain. But you have to execute Section 1231 exchange. Okay? Very important. Because a lot of times people don't know that is a formal thing that you have to do. You have to contact... I believe they have a specialist that actually help with that kind of execution, because you're not going to get the loan. You're not going to get the proceed. The proceed from the sale of the property has to be in one account. Okay. And then they will now use that from that account, transfer that for the new property that you are purchasing. And it has to be a like kind, you know, it has to be. So if it was an investment, property, you have to use the proceeds to get another investment property, okay? And you will not have to pay capital gain taxes on that. Okay, I hope I answered the question. So it is not taxable, but you have to make sure that you are executing it correctly. You just can't sell a property and say, yes, I want to use it. I want to take Section 1231. No, you have to get the proceed. They will put that in an account. So it's an escrow account that it will keep the proceed in, and then you would use that proceed to buy another like kind property. So to answer your question, it is not taxable if you do it the right way, okay? Because a lot of people, they just sell the property without consulting the right person. You know, you want to make sure you do that so you take advantage of all the tax benefits. Okay, thank you. You are welcome, Lyle. I hope I answered the question right. So, okay, I think we're moving right along here. So I talked about the deadline. I talked about filing your personal property taxes by April 15 is very important. Otherwise, your business is going to go into not good standing. So you want to make sure that you get that in. And if you receive the PPP loan or you are yet to apply for the PPP loan, you have until May 31st to do that, okay? So you want to also start applying for the PPP loan forgiveness. So if you receive the loan and you spend the loan to pay yourself, now is the time that you want to start applying for the PPP loan forgiveness. All right. You have 8 weeks. You can either apply for the forgiveness 8 weeks after you get the loan or 24 weeks, okay? So you can spread it out within 2 months or 24 weeks, all right? So I want to talk about what triggers IRS audits. Because over the past couple of weeks, I'm telling you, we have signed up so many clients who got audited. Well, not my clients, but new clients. They are now a client, but you know, they randomly pick their tax return for an audit. So I want to kind of go over key things that triggers IRS audits. As you know, I own a tax resolution practice here in Columbia, Maryland, where we help people resolve their tax problems. So if you have, you know, outstanding taxes that you need to catch up on all the back years and get in compliance with your taxes or negotiate taxes, this is really what we focus on in my practice. So we are sort of like a tax advocate. You know, we help people, we represent them by the IRS, we help you negotiate the best settlement. I mean, we've gotten like amazing offers on behalf of our clients. You know, there was the recent approval that we received, Ume, yes. The one that we just got approval for this week, the payment plan. Yeah, don't mention the name, but the amounts. What was the total? What was his total taxes? Around 200,000. 200,000. And what was the payment plan that we set up for him?
Monthly $78.
$78. Think about that. You know, his total taxes was about $220,000. And we were able to negotiate $78 on a monthly basis. If he is able to maintain that $78 on a monthly basis and he keep that payment plan, of course, you have to be in good compliance. You cannot keep adding taxes to what we already negotiated, you know. So if he keep paying that $78,000, he will get a chance of getting about 200 tax write-off by the expiration date. Okay, I mean, it is amazing. Is not a regular payment plan. A lot of people always say, oh, this is easy, I can just call the IRS and set up a payment plan. No, the type of payment plan that we do for clients is the partial pay, where we would provide a financial analysis. We will show the IRS what your gross sales and your expenses, and we will negotiate based on your monthly disposable income. Very, very important. So if you hold like 6 figures in taxes and you don't even know what to do, or the payment plan that you currently own is a lot of money for you to keep up with, that is illegal. IRS should not impose on you a payment plan that will cause hardship or push you on the streets. Okay, so you have options. I want you to know that you do have options. You know, we have to fill out a 433A, show the income and all your expenses, and negotiate what is affordable. And you maintain that payment plan until your taxes start to expire, okay? There's a collection statute expiration date for every tax assessment. It's 10 years. So let's say you filed in 2014, like this client that I'm talking about, he had taxes all the way from 2012, okay? And he filed, the tax deadline for 2012 was May 15, 2013. One of his taxes will be expiring very soon, in 2 years, 2023. So come 2023, if he maintained that payment plan, the taxes will just fall off his transcript and he will not have to pay a dime. You know, I mean, it is amazing. So you need to know that you have options. I don't want you to live in fear that you don't even know what to do, because I talk to a lot of people on a daily basis, because, you know, we get lots of inquiry, lots of prospects, lots of leads that comes in, and I talk to people on a daily basis, and people live in fear because they don't know what to do. So I want you to know that you have options. You not being on a payment plan or any kind of agreement with the IRS is going to cost you more money. When you get on a payment plan, it does 2 to 3 things for you. The first thing, your failure to pay penalties will be cut by half, okay? Because, you know, on a daily basis, if you have outstanding taxes that you owe, IRS is adding interest and penalties is occurring on a daily basis. Just by getting on a payment plan, that will be cut into half. Your failure to pay penalties will reduce by 50%. Okay. And what else? It also protects you. It protects you from any levy or any like wages garnishment. So you don't have to live in fear that you sleep one morning and you wake up and your bank account is gone. Because IRS can do that. They have the right to come after your bank account and take your money. Okay? So you want to make sure that you kind of establish some kind of agreement. You know, if you have multiple years that you haven't filed, you want to get those filed and negotiate a settlement. You know, this different settlement. We can do a partial pay, which is what I just explained, where we would negotiate the lowest monthly payment plan, and you stay on that payment plan until your set dates arrive, and you don't have to pay the rest of the taxes, depending on when you filed the tax return, okay? Or we can do an offer and compromise. Offer and compromise is where we would offer an amount to settle your taxes for less than what you owe. It's amazing. I mean, we've gotten several OIC offers for clients, but you have to be able to show that you are in hardship. And so if you have a house with equity in it, it's going to be impossible for you to get an offer, because IRS will tell you to sell your house and get the equity to settle your taxes. So all those people, you know, that, because I get a lot of calls, people would tell me, oh, but this company told me they can help me. They can help me with an OIC. And I start to ask questions like, do you have savings account? Do you have 401k? Do you have equity in your home? And they answer yes to all these questions. You know that that's a scam, because IRS would not give you an OIC if you have, you know, a lot of money in your bank account to pay off your taxes. So you have to be very careful, because a lot of people are not honest. You know, I don't care how much money you're going to pay me. If I know that we cannot help you, I'm not going to take it. I would not accept, you know, that engagement. But not everybody have that policy. So you have to be very careful that, you know, you are asking the right questions when you're trying to pay someone to help you resolve your tax debt. Okay? So I think I went off topic a little bit. I was trying to talk about what triggers IRS audits. So, you know, we get, like I said, we have so many people that we are representing between now till April 15 that, you know, we have to provide supporting documentation for all the expenses that they claim on their tax return. So I want to please encourage you, when you run your business, okay, make sure that you are keeping track of your supporting documentation. Just having a bank statement or having a separate bank account where you run all your charges through, bank statements is not enough evidence when you get audited, okay? You have to be able to show invoices, supporting documentation to back up the bank statements. Because a lot of times people like will represent themselves in an audit, and I will hear, you know, Bernice, I provided everything to the IRS, I provided everything to the states, and they still came back with no change. I still have to pay so much money. And then I start to ask the questions. What type of supporting documentation did you provide? And, you know, they will claim they only turn in their bank statements. Bank statement is not substantial evidence, okay? Because anybody can use your card for any other charges other than business. So if you are an agent and we all know you spend a lot of money on advertising. If you have a small business that you have to run Facebook ads, or you have, you know, dues and monthly dues and subscription fees, in addition to your bank statement, you have to make sure you are keeping your invoices. Very, very important. This will cost you so much money if you randomly get audited and you don't have any support. I mean, I've seen crazy cases, a lot of situations whereby, you know, people get audited and they have to like pay back $30,000, $40,000. Don't let that happen to you. So if you like sign up for Facebook ad or any, you know, advertising, make sure that you're keeping track of your invoices. You're keeping that somewhere, you know, in addition with your bank statements. Make sure that you keep your personal bank statement away from the business. Separate your business activity from your personal. Very, very important. You have no idea how many clients I had to fight for just to make sure that they don't pay so much back to the IRS. So I'm sick and tired of seeing the same mistake all the time. So make sure that you are not just keeping just bank statements, you are also retaining your invoices, your purchase order, all those things. If you travel, you need your itinerary, you need evidence to show that the travel is for business. Very, very important, okay? Very, very important. So what are the things that triggers IRS audits? One second, get some water. All right. So, do I have any questions now? Okay, so one of the red flags that I know that, if you do it, you have a very, very good chance of getting audited is if you claim that you own a business. Okay, I had someone who came in actually last week. She got a letter in the mail, she's getting audited because right now IRS is back in full force. Their audit department, they are working, they are picking returns randomly and requesting for supporting documentation. I mean, this is real. So be careful. So the lady came in and she got audited, and of course she wanted, my company to represent. And when, I was just asking questions, looking at the tax return that got audited, and to my surprise, so if you know that you are doing very well in business, I mean, you make 6 figures, please make sure if you are writing off your entire income, you have evidence to back it up. So one of the things that triggers IRS audit is if you report certain amount of income and then you are reporting expenses higher than your income and you don't have any other source of income. So you claim to make $89,000 in your business, right? And you are writing off the entire $89,000 as expenses. I mean, come on. Those are the things. I'm not saying it's not possible. Don't get me wrong. Because a lot of times when you're just starting out a business, we all know, you still have to kind of, nurture the business, spend a lot of money. It is possible. But you have to make sure that you have evidence to prove it. Okay? So claiming expenses that is like more than 50% of your income could trigger an IRS audit. Second thing is your auto. I've seen situations whereby, especially Uber, all these people that drive Uber, Lyft, you receive that 1099. When you receive the 1099, it comes with like a log that shows you your mileage and everything. I've seen situations whereby people would not have any other support but claim the entire 1099 that they received from Uber, the entire amount as a business expense, and write it off in full. So how did you survive? Like, how did you live if you have no other income? I mean, these are the things that triggers IRS audits, so very important. Also, for real estate agents, we all know that majority of your expenses is auto. You spend a lot of time in your car, you go for showing, you show several houses to your clients and everything. Make sure that you have a mileage log, because if they audit you and they pick your auto expenses, because that's one of the things that they look at if you are self-employed, especially for real estate agents, because you would know that that's one of your major expense that you claim on your taxes. Make sure that you are keeping track of your miles. Very, very important. I tell my clients, there's this app called Miles IQ. You can download that Miles IQ on your phone. So each time you step into your car, it will ask you, is this a business or personal ride? You click business, okay? And the app will track your mileage. So at the end of the year, when you are ready to file your taxes, all you have to do is just print out the reports. Everything is already logged down. So if you have to provide evidence to show support for your mileage, IRS want to see a mileage log that shows your dates, the location address to and from. So you, from your house to your office on a daily basis, is not deductible. I see people do this all the time. because that's a normal commute. I have an office. I come here every day from my house. I can't deduct the regular miles from my house to my office, but I can deduct from office to several client sites. Okay, very, very key, except if you have like home office and you go from your home office as an agent. A lot of agents, they work out of their home office. So if you go from your home office to several client sites, then you can, you can claim that. All right, but just a regular commute from your home to your office is not deductible. But from your office to other client sites are deductible. So I want to make sure I get that. So that's also one of the, one of the things that triggers IRS audits. If you're claiming like lots of, you claim, I've seen people claim like $60,000 in miles. Like, where are you going? Like, seriously. I mean, you make, for the entire year, you make $50,000 and you're claiming that you drove 60,000 miles. I mean, that's just unreasonable. Okay? So a lot of times, if your total expenses are like more than half of your income, you stand a chance of getting audited. Another things that I see, people with W-2. If you have a W-2 wages and you want to file your tax, some people would come up with a Schedule C just to make up expenses, claim a loss to decrease their W-2 wages. Those type of things, you have a chance of getting audited. So these are the things that triggers IRS audits. I've seen situation whereby this guy came to me like 2 weeks ago. His total W-2 was about $170,000 in W-2. And he was looking for ways to decrease his tax liability. So he made up a Schedule C, expenses, and write off more than half. It showed a huge loss on his Schedule C. I mean, and I doubt if the business even exists. Like, it was just a way for him to decrease his W-2 wages so that he can get a lot of refund. This type of things will put you in a lot of trouble. You really don't want to do that. Yes, you can have a business and you don't make that much profits, but make sure that you have your supporting documentation to show for it, okay? So I think that will be it for the day. If you have any other questions, this is the last call. You can go ahead and put it on there and I can answer. But I think I, talked about the tax deadline is now May 17th. Make sure you file your personal property taxes by April 15th. Very important. They did not extend that, okay? So make sure you get that filed. What else? Apply for the PPP loan forgiveness. After 8 weeks, when you get the funds, you can go ahead and apply for the PPP loan, okay? Forgiveness. So you get 100%. If you spend everything on wages, if you don't have office rent, just pay yourself all the funds. Get the total funds, divide by 8 weeks, and transfer that to your personal account. That's all you need to do. Just transfer every week or every 2 weeks. And after 8 weeks, you can apply for the loan forgiveness, for the PPP, okay? What else? I talked about what triggers IRS audits and also resolving tax problems. That's really what we do. There are several tax resolution options available to resolve your problems. So if you have anyone who, is struggling right now, don't know what to do regarding the back taxes, need help negotiating deals, I mentioned that earlier. You can either do a Streamline payment plan, which is a full pay. The full pay is where you would just take the total amount, would divide by 72 months, and at the end of your payment terms, you would have paid your taxes in full. Or we can do a partial pay, which is the one that one of my employees just mentioned, that if you report the financial analysis, your income and expenses, we can negotiate the lowest monthly payment plan for you, lock you on that until your taxes start to fall off due to CSED. Very, very impressive settlements that we've done for lots of our clients. So if you are struggling and you don't know how to even go about it, I would love to talk to you to see what your options are. OIC is also another option to resolve your tax problem. You can do an offer and compromise. This is where we would say, hey, Mr. XYZ is ready to start afresh. You want to turn a new leaf now. You don't want to go back to your old self anymore. So now you have like this $500,000 or 6 figures in taxes, you dead broke, you don't have any income, you don't have any equity, you just want to, you want a new fresh start initiatives, we can negotiate an offer. We'll come up with an amount based on your equity and everything, and offer an amount to resolve your taxes for less than what you owe. We can even put you on currently non-collectible status. We've done that for a lot of people, that they have outstanding taxes, but right now they are not working. Maybe they lost their job or they are in between jobs, and they don't want to live in fear of just going to bed at night thinking IRS can come after their bank account. So if you are in that kind of situation that you're not making any income, we can lock you in currently non-collectible status. Very, very impressive, because you'll be on currently non-collectible is very similar to the payment plan. The only thing is just you're not making any payments. You're not making any payments because you don't have a job, you don't have the means to pay them. If your expenses are higher than your income, you can get on the currently non-collectible. And the beauty of that is your collection statute expiration dates, because taxes expires 10 years after assessment. Your statute will still continue to run even while you're on the currently non-collectible status. Very, very impressive. So, what's the other option? So I talked about the partial pay, OIC, full pay, currently non-collectible. And there's another one too. There's another one. Ume, the one that we did for this client that her husband filed for her, but she's not. Innocent spouse relief. That's another one. Sometimes people go through bad divorce, very bad divorce, that, maybe their spouse, was, the business owner that was making a lot of money but not paying their tax, but they filing jointly, and for some reason they had to go their separate ways. You don't want to end up paying taxes for your spouse that you're no longer with. So if you know that all the taxes that you currently owe is not for you, it's for your spouse, there's something they call innocent spouse relief. We can definitely talk about that if you are, in that situation, okay? So that is all I have for today. I think I have one more questions. Okay, so I have another question. When investing, I can't even read. I need to wear my glasses. When investing in real estate and a person invests in the project financially, do you give them a 1099? Jeff, you have to kind of explain that to me. What do you mean invest in are you guys partnership? Do you both own the business? Or is just an investor? You can just type your comments, okay? I'll wait for you to type that. You have to expatiate on that a little bit more. I'm not sure if I understood the question very well. When investing in real estate and a person invests in the project financially, do you need to give them a 1099? So it depends. Is it are the investors also shareholders? Because if they are shareholders, if you own the business with them, right, and they invest, and at the end of the year, right, you had a profit or loss, they have to get a K1 if it's a, partnership. I don't know so is it a co-owner or is just a random investment? I'm not sure if I understand the question very well. KJ Jeff, it looks like you're still watching. You can type in tell me more about it. But if they are partners and they both invest in the business, right, you will get a K1 for your share of income or loss at the end of the year. Okay, so if you come together and form a partnership and you invest in a business, and at the end of the year you show a profit, each shareholder will get a K1 based on their share of based on their interest, their shareholder interest. So if I own a business and I own it with somebody else, and mine is 51%, right? So if you show a loss, I will be getting 51% of that loss to claim on my tax return. Okay, so they will get a K1. Okay, it's just an investor. I own the LLC. I had someone invest money in return for a percentage. So what type of 1099? The only time that you give them, so if they are not like partnership, if it's not a partnership, you own the business and someone invested in the business, right? I'm sure you kind of have a written agreement that shows like the amount that the person, I'm sure you have all that. But when it comes to taxes, the only time you have to issue a 1099 is if they get a dividend. So, you know, when you pay them back the return on investment, whatever profits that they get. So let's say I come into your business now and I invest $50,000, right? And at the end of the year, you spend my $50,000 and you made substantial amount of money. Let's say you double that money. When you give me back $100,000, you're not going to issue 1099 dividend for $100,000. It will be for $50,000, which is the profit. So whatever return on investments that the person get, they will get a 1099 dividend for that. So it will not be the regular 1099 miscellaneous. 1099 miscellaneous is if someone worked for you as a contractor, you give them 1099 miscellaneous, right? But if they invest and they sort of like when you go to the bank and you put your money in a bank account, right? At the end of the year, the bank will give you 1099 interest. That's the same thing, Jeff. You will give them 1099 dividends, okay? I hope that was clear. Comment if you understand my response or you want me to explain further, but I think I kind of answered that question.
I can't hear you.
Right, Jeff? Give me thumbs up if I answer your question because I'm getting ready to like kind of tune out. We have a lot of work to do. March is actually the busiest month for us. Maybe because of the, you know, the PPP loan and the tax deadline and IRS representation is just so much. Okay, so they get a 1099 on the interest on their investment. That's right. They get a 1099 on the interest that they earn or profits, okay? The profits, the interest, yes. Not their actual investment because it's like, you know, they put money in. You can't give them 1099 to pay taxes on the money that they put in. But if the money that they put in, if they get like interest or return on investment, that's what they have to get the 1099 for. 1099 dividends, okay? 1099 DIV. All right? Okay, so if you don't have any other questions, I think that will be it for today. Thank you so much for tuning in. If you have any other questions, feel free to drop a comment or you can call the office. You know, my employees will, you know, if you need to get on my calendar, they will be glad to schedule your call. All right, you got it. Thank you. All right, that's good. And if you know, find this live video very useful, please share this. You know, let other people benefit from the, you know, information that I shared. So I would love for you to share that as well if you can. Thank you so much and have a wonderful day. Bye-bye.